Thanks for tuning in to another video from Netpicks. And this lesson is going to be about the shooting star candlestick pattern. And you know what? It's not really a pattern. It's one candlestick. But what it does require are the candles before and after to have lower highs. That's going to make it more effective than just finding it anywhere on the chart. So what is it? It's a bearish reversal. It's a one candle pattern, and it's relevant during an uptrend in price. Even take away just the trend, if the trend is down but our direction is up, for example in a rally in price, we could use that as well. And you can really find this on any time frame, and it's really easier to see on a candlestick chart than a bar chart. And some of the features are the exact opposite of the hammer candlestick that I spoke about. We want a long upper wick, and that should make up over 2/3 of the total height of the candle. The price is going to close in the bottom third of the candlestick and have a small body. And there can be a small shadow, there can be no shadow, it doesn't really matter. And what it really means is the sellers have been able to push the price down from highs and hold at the lows at the close. And that's bearish. That's a bearish event. So what does it mean? Well, the pattern, it highlights a market that during the period that's represented by the candlestick, your daily chart, your weekly chart, hourly chart, whatever it is, buyers are strong enough to push price higher. Well, sometime during that time period that's represented, the selling pressure was strong enough to overwhelm the buyers, drive prices lower. And then the sellers, they could hold the prices near the lows. And while the price may close lower than the open, the price can also close higher than the open. And we're going to have a green body when that happens. So I want you to imagine that the price is in an uptrend. You see the appearance of the shooting star. Well, on the lower time frames, what you're really seeing is a complete downtrending price structure of lower highs and lows. But in your current time frame, what you're seeing are the sellers taking out the buyers, and we have the potential of a change of trend, or in the short term, just the direction. And traders, they often place a sell stop order just below the lows of the candlestick to enter short. Now, the long upper wick, that can be hard on the psychology of traders that are long. So let's think about this. The buyers are enjoying the profits that they gained during the uptrend. Now, the long upper shadow, that shows a flurry of selling activity stepping into the market. And when we close on the lows, think of it inciting fear in those that are holding the long positions. So those people that have a bearish view on the market and the buyers that are selling to exit, we can see a sharp drop in the price. So the key really is that you want to see a market that is in an obvious mature uptrend. So how do we trade it? Well, considering it's bearish, let's take a look at shorting the market when we see it. But we don't want to short every time it appears on the chart, because these candlesticks can show up in a random location on the chart. So here the price is in an uptrend. We had a break of a trend line, and that indicates the uptrend is still intact. And if you were to short it with the appearance of the reversal candlestick, you'd have a losing trade. But here's the thing. This shooting star candlestick, it's a bearish reversal candlestick just like any other one. Take a look at these reversal candlesticks here. All we're seeing is an indication of who's in control of the market at that point, and that's going to show a potential price reversal. You can see strong momentum down with the first one. We can see lack of further upside with a descending hawk, and a total wipeout of buyers with that 3 outside down pattern. So you can use the same trading strategy we're going to talk about to trade any reversal candlestick, and that includes the shooting star one. And this strategy is pure technical analysis based. We want to look for a trending market, and you can use a trading indicator like the 50-period moving average. You can use higher highs and lows to show an uptrend, whatever you want to use. Price is going to enter an area where you might expect a reaction. We want to look for a reversal candlestick like the shooting star. And this example here, this takes into account a breakout plus the ending of an A to B equals a C to D price move. So one, we got prices trending upwards as noted by higher highs and lows. Price breaks out of a prior resistance area with momentum. We see the shooting star candle appear after a strong momentum breakout. We are also at the D of the A to B equals C to D price move. So traders that were long into the breakout and those that went long at the breakout, they see sellers stepping in. price collapses with an eventual 14% drop in the price. So how can we improve this strategy? And a lot of traders, they're going to talk about support and resistance levels, but the key is knowing if the levels that you're looking at have any meaning at all. So really stick to obvious turning points that you can see on the chart, which means other people can see them on the chart, and that's just the best bet when looking for levels. So when we trade a reversal, we want to have a reason to think of a reversal. Does that make any sense? Think of a strong momentum move to the upside. So traders are feeling good. They see the strong movement in price. If they're long, it carries their profits. A slight pullback, hey, that's normal. And the longs can sit through that slow price drift. When price drives back up, and then they see the shooting star pattern, what are they thinking? Well, if you look at this, what would you be thinking as someone that's holding longs? And I personally use this particular candlestick as part of my failure test strategy. Now, incorporating a momentum measure, either by looking at the candlesticks or a trading indicator like the RSI or some sort of bands, that can add another level to the probability of trading reversal. Now, stop loss. You can use the price pattern itself by setting your stop loss just above the turning point. Using the ATR, that's also a viable approach. And traders are going to have to decide if that break of the pivot high is going to be enough for them to believe that the setup has failed. And yeah, the ATR, it can give you some wiggle room, and it does take into account the market volatility. A trader has to know what their psychological limits are when price moves against them. So let's wrap this up. The shooting star, it's a single candlestick pattern. We want to look for this candle to form in an uptrend to signal a possible change in market direction. The structure of the candle makes it pretty easy to spot. We have a long wick, small real body at the low. Only consider using these at points on the chart where you would expect a reaction. Using momentum as a prerequisite in the up move, that can often lead to explosive moves down when you trade these. Your stop loss, keep it simple with an ATR level or just above the high of the candle. You should consider trailing stops as well, because when this reverses, you may have caught the beginning of a prolonged downtrend or a complex correction. Well, thanks for watching. Let me know if you've ever traded reversal candlesticks before, and if you have, put them in the comments below. Hope you like it, subscribe, and we'll talk soon.